Hi guys, February 20th after the market closed, and we're looking at a chart of S&P 500, and this is what happened today. We were grinding in this channel every day after day and frustrating the bears and also the longs, because every morning the market would open and it'll grind higher and grind higher. But today, after the Fed's minute meetings, actually the market was a catalyst and it dropped, and this was formed a big bearish engulfing candle that has taken out last 4 or 5 days, about a week worth of gains in one single shot within our 90 minutes. And today the market decisively broke that lower channel, lower trend line, the 10-day moving average, and almost came to rest at the 21-day moving average. Now whenever you have this big bearish engulfing candle, there's usually a follow through, and then we probably can see tomorrow breaking this 21-day moving average if the selling can stop. It hasn't stopped, and it is expected that the market at this stage in that channel needs some kind of a rest or sideways motion. And it's very healthy to have a correction here, because the market has been extremely overbought over the last month, 5 weeks, 6 weeks. So how far this rally can continue, probably it's coming to an end. Let's take a look at the action here on 15-minute chart. This was what it looked like in the last hour and a half. This was a selling, breaking all this thing, major big red candles, and everything just crashed towards the end. So let's take a look at another stock here, which is the index RUT. This is a leading index here, and RUT was more punishing. It just had nothing but red candles here in an hour and a half selling. Of course, it made a 931 year multi-year high, almost a decade year high, and this is the picture on the daily charts. This was the grind that was taking place, 932, and a big bearish engulfing candle that has taken out almost up to here everything. That's what we could get into. And if you look at it, this is a 10-day moving average is violated, and then the 21-day moving average is also violated. It's extremely overbought at this time. Now let's take a look at some of the stocks here, which is Google, and I want to get into that. This stock has now made it high for 808 and is forming a railroad ties pattern called chimney pattern, and different names for it. And what this indicates is some kind of a market top after the commodity or the asset has run up, and this is a big run up it did, and it formed a multi-year high. Google has never been this high, and now it's forming this bearish looking candle and pattern. Let's see how the market holds on that. It's extremely overbought, you can see that. Apple, on the other hand, which is almost half the size, half the stock price, 450.48 it closed, and you can see the bearish action in the bearish candles here. It is headed towards the gap area, which is this that was set from last year's earnings, and if it starts dropping here, it can go down to the 425 level. That is the state of affair with this stock. Is never been able to make and get up and over that governing trend line. This trend line is strongly governing the downtrend. Every time it comes back here, you have seen 2 or 3 or 4 instances it is getting sold off, and it does not break through it. So it may again try to attempt to come here at 474, 475, and then still end up going towards that gap that gets shorted. This has to be changed. I don't know if the investors meeting or the stockholders meeting or activism on the part of the stockholders would push this stock and break that trend line. Once it is broken, then the stock probably can figure out to go above that side of the trade. There is no trade on this side of the trend line, you can see that, and that is what is the governing action is. And Apple, a lot of people have been disappointed by that. They keep on trading it religiously, but it always gives them a harsher results. So let's move on and look at some of the other things. What I want to show is VIX, which is this, and no, what in the world is happening here? Take a look at VIX, VIX. Let's see if we get to it here. Now VIX today has been into the low tens, almost it would have vanished into the single digits here, but today it popped right back up to the 50-day line here from underneath, and today it is 14.6 here. You might want to see this VIX come up here for 16 or 17 levels like it was here, and this would have been okay or normal market conditions, because the VIX and the fear index, whatever you call it, has been way below, and then it was just here, and now it's trying to go back up here. Let's see how the next few sessions take place. The market direction still remains lower.